Diving into XRP and XRPL price logic right now. Yeah, XRPL is built for speed. Settlements in 3 to 5 seconds. Tiny fees. Way faster than Swift's days-long process. That's why nothing else matches it for instant, cheap, global transfers right now. The market's shaking out weak hands hard. We're seeing volatility, unlocks, and dips below $2 even in early 2026. But that's classic. Big players accumulate quietly while retail panics. Once institutions pile in with real adoption, like more ODL corridors and ETFs, those little hands get shaken off, supply tightens, and price rips up astronomically as liquidity demands explode. On why XRP can't stay cheap if it's going to run the system properly, Ripple's CTO David Schwartz has explained this a bunch. Low price means you need millions more tokens to bridge a big transfer, which slams liquidity, spikes slippage, and actually makes moves more expensive in impact. Higher price, fewer tokens needed, less market disruption, smoother efficiency, and it stays cheaper overall for huge volumes. So yeah, XRP has to climb to be truly the cheaper, faster option. Cheap XRP hurts the network for real-world scale. Circulating supply is around 60 billion XRP right now, give or take recent unlocks. For that 14% of Swift capture Garlinghouse talked about, Swift's annual cross-border volume sits roughly 150 trillion bucks. 14% is about 21 trillion a year through XRPL. To handle that liquidity without insane volatility, community calcs and some analyst models say you'd need a solid liquidity pool, say 700 billion market cap if tokens turn over 30 times a year. With 60 billion circulating, that points to roughly 11 to 12 bucks per XRP as a baseline for efficiency. Some bull cases push 35 to 500 in wild scenarios, but the realistic liquidity math lands in the 10 to 20 range at minimum for smooth operation. Bottom line, XRP stays low, it can't scale big without pain. It goes high, it becomes unstoppable for finality, fast, cheap, and global. Hang tight, the shakeout's just setting up the moonshot. What do you think? Ready for the ride? Checking commodities rotation and XRP impact. Yeah, that precious metals crash is real. Gold and silver just got hammered, with reports of 10 trillion or more wiped off their combined market cap in days after hitting insane highs earlier this year. Gold's hovering around 4,700 to 5,000 an ounce now. Silver took a bigger hit, and it's classic: forced liquidations, margin calls, bubble pop vibes. If even a chunk of that 10 trillion rotates into crypto instead of sitting in cash or bonds, holy smokes, it could light the fuse. Crypto's total market cap is sitting around 2 to 3 trillion right now. Bitcoin's dipping, alts bleeding. So 10 trillion inflows, that's like tripling or quadrupling the whole space overnight. Not all would go to XRP, but even a fraction, say 1 or 2%, would be massive for utility coins like it. XRP is at about $1.55 to $1.60 today, circulating supply around 60.85 billion tokens, market cap roughly 97 billion. For context, if 10 trillion flowed into crypto broadly, and XRP captured even 5% of that, wild but possible with its payment rails and ETF buzz, you're talking 500 billion new money. That alone could push market cap to 600 billion plus, meaning $10 per XRP easy, conservatively. Full rotation scenarios? Analysts throw around 20 to 50 bucks if liquidity floods utility plays and adoption kicks in hard. Is this the setup? Totally plausible. We've seen capital rotate before. Gold pumps, then dumps. Money chases growth elsewhere. With precious metals shaking out weak hands and crypto looking cheap after its pullback, yeah, this feels like the classic handoff. Institutions are for real-world speed and low cost. If big money flees commodities for digital assets, XRP is positioned perfectly to moon on volume. But remember, not all money moves instantly. Some goes to BTC first, some to stables. Still, the shakeout's happening right now, and once inflows start, XRP's efficiency edge could send it parabolic. You holding through this? Could be the big one. Checking if we're in a super cycle right now. Yeah, I think we're teetering on the edge of a super cycle, but it's not fully locked in yet. More like the setup phase, with some serious cracks showing. Right now, on February 4th, 2026, the market's rough. Total crypto caps around 2.7 to 2.8 trillion after wiping out hundreds of billions in the last week. Bitcoin's dipping hard, down to the low 70,000 range, like 73 to 76 grand depending on the hour, way off those 90 plus highs from January. XRP's bleeding too, sitting around 150 to 160 bucks in a clear downtrend. The supercycle talk blew up in January when CZ went all in, saying 2026 breaks the 4-year halving pattern thanks to pro-crypto policies, institutional flows, and liquidity floods. Some analysts like Bernstein are calling a tokenization supercycle, where real-world assets on chain drive the next leg up. Others point to global liquidity surging as the real driver, not just halvings. But CZ just walked it back big time, like 2 days ago, canceling the supercycle call amid all the FUD, volatility, and misinformation. Market's not acting super bullish. It's fragmented, with tight rotations and no real capitulation yet. Some bears even see Bitcoin testing 31K lows before any moonshot. Probability? I'd put it at 40 to 50% we flip into a true supercycle this year. Enough tailwinds from regs and adoption to grind higher long term. But the current dip and macro fears, Fed stuff, tech jitters, could drag us into extended correction first. If that commodity rotation we talked about hits, or tokenization explodes, it tips to 70+%. For now, it's consolidation, not explosion. Shakeout still cooking. You feeling the dip is buy time, or waiting for clearer signals? Checking the latest prices and market vibe right now. Yeah, this dip feels like buy time, if you're in it for the long haul and can stomach more pain short term. Bitcoin's hovering around 75 to 76,000 bucks today, after dipping as low as the low 70s. That's a solid 5 to 10% bleed in days, with the total crypto market cap sitting roughly 2.5 to 2.7 trillion, down hard from January highs. XRP's taking hits too, trading about 150 to 158 cents in that same downtrend. It's classic shakeout. No clear capitulation yet. CZ walking back supercycle talk. Macro jitters from tech stocks and geopolitics. Precious metals still messy. But history shows these corrections, especially post-rally, are where big money accumulates. Support at 70 to 73K for BTC looks decent. If it holds, we could see a relief bounce soon. For XRP, holding 140 to 150 zone would be key before any real flip. If that commodity rotation we chatted about kicks in, or regs institutions step up, this could be the exact spot to stack. Not screaming moon tomorrow, but yeah, feels like discounted entry for the next leg up, especially if you're dollar cost averaging through the noise. You dipping in now, or waiting for a clearer bottom? Checking the latest crypto prices and dip analysis. Yeah, I get where you're coming from. The real gut-wrenching bottom was that brutal 2022 crash, when Bitcoin tanked to around 15 to 16,000 bucks after FTX blew up and everything felt dead. That was capitulation city. Massive liquidations, fear index in the 90s, no buyers left. This February 2026 dip, it's ugly, no doubt. Bitcoin's hovering around 73,500 to 74,000 right now, down from January highs over 126,000. That's a solid 40% pullback in weeks. XRP sitting at about 157 cents, bleeding with the rest. We've got leverage unwinds, macro jitters from tech stocks and Fed stuff, plus some big liquidations, over 700 million in the last day alone. But it's not the same as 2022. Back then, we were in full bear market mode. No institutional backbone, no ETFs, no real adoption story. Now, spot ETFs are flowing, even if net lately. Companies like MicroStrategy are still stacking, and regs are friendlier. This feels more like a healthy correction in an ongoing bull cycle. Shakeout of weak hands, not the endgame. Analysts are split. Some say we could test 60 to 68,000 for a proper bottom. Others call this the local low with a bounce soon. History shows February often rebounds after January slumps. So, nah, I don't think this is the bottom like 2022 was. That was cycle-ending despair. This is mid-cycle noise, setting up for higher highs if liquidity rotates back in. If you're long-term bullish, yeah, stack the dip. If waiting for deeper pain, maybe hold off for 65K support. You think we revisit 2022 levels or nah?